Gold shines and Albemarle walks away from Liontown. Welcome to Kitco Roundtable. I'm your host, Michael McCrae. Paul Harris is here.
Hey, Michael, how are you?
And our guest is Stephen Stewart. He is CEO of QC Copper and also OrCap Invest. Stephen, welcome back.
Thank you for having me, gentlemen. Good morning.
Or Can you thumbnail the two? Sorry. Thank you very much. I know we're in all different time zones. Stephen, can you thumbnail the two companies?
So I'm here on behalf of QC Copper and Gold, where we own and operate one of the largest undeveloped copper resources in Quebec, and if not Eastern Canada. We're just weeks away from publishing our updated mineral resource estimate, which is going to grow our 104 million tons, which is at a 0.9% copper equivalent. Additionally to that, I'm also the founder and chairman of a company called OrCap, which additionally just acquired one of the largest copper resources in Eastern Canada, in Ontario this time, called the Thierry Mine. And it, just like QC Copper, former producer, great grades, access to infrastructure. We're big copper bulls, so we want to put ourselves in front of that wave that's coming.
Let's turn to macro. The gold price has been unstoppable move higher when war fears entered the marketplace last week. That according to Kitco contributor David Erfle. Despite the U.S. 10-year bond yield rising 5%, the safe haven metal has risen from 1825 just 2 weeks ago to closer to the 2000 level. That's an impressive 9% jump so far this month. Gold miners are finally up too. The GDX, which tracks precious metals miners, traded up 4% for the week. Gold has been resilient in the face of Fed pressure from interest rates at the Economic Club in New York on Thursday. Federal Reserve Chair Jerome Powell reiterated his stance that interest rates will have to be higher for longer, but he provided little new guidance on monetary policy heading into the new year. Analysts have noted that the gold market has priced in a lot of bad news already, and the Federal Reserve, near the end of its tightening cycle, should not provide the same headwinds for the precious metals. Brent crude oil prices moved closer to $100 a barrel on Middle Eastern worries. Copper was mostly flat this week, with copper futures ending the week at $3.50 a pound level, down nearly 20% from the January high. In his Q3, Freeport McMoran told analysts, due to soft copper prices and higher capital costs, it's difficult to justify new mine development. That according to Reuters. Up next, we're going to be talking to Paul Harris, but just a word from our sponsor, G Mining Ventures, ticker GMIN on the TSX Venture and GMINF on the OTCQX, is on its way to become the next mid-tier precious metal producer by leveraging strong access to capital and proven mine development expertise. The principals at GMIN are responsible for the on-budget and on-time delivery of 100% of the capital builds, totaling $2 billion in construction costs. GMIN is anchored by its flagship Tocantinzinho project in the mining-friendly and prospective state of Para, Brazil. The project is an open-pittable gold deposit containing 2.0 million ounces of reserve at 1.31 grams per ton. The deposit is open at depth and underexplored at 996 square kilometer land package, presenting additional exploration possibility. The project is constructed to over 50% and is fully funded through commercial production expected in the second half of 2024. Paul, thanks for joining us from Europe. What are those mining headlines?
Well, thank you, Michael. Robert Friedland said a company he has been an angel investor in is making lithium metal direct from brine. And so the current lithium market as we know it will cease to exist, which may make the next news items moot in time. Or we can take a pinch of salt with that, pardon the pun, and carry on with Albemarle no longer prowling for Liontown. ASX-listed Liontown Resources lost about $2 billion Australian in its market capitalisation this week after the lithium giant Albemarle walked away from a takeover deal that got too rich for it, after Australian iron ore baroness Tina Rinehart spent about $1 billion Australian dollars to build a 19.9% shareholding in the junior. Liontown's share price slumped from $3 to $2. With it still gone, the company subsequently announced a 760 million Australian debt funding package and fully underwritten 376 million Australian equity raise at $1.80 per share to advance its Kathleen Valley lithium project in Western Australia. Having more deal success, Australia's Lithium Power International is to be acquired by Chile's state copper company Codelco for 385 million Australian dollars, a 119% premium to its closing share price on September the 26th. The 57-cent per share deal is the first lithium acquisition by Codelco, which has a government mandate to become a lithium producer. Both companies have properties in the Maricunga Salar, a district better known for its gold production until now. LPI's Maricunga project hosts an estimated 1.9 million tonnes of lithium carbonate equivalent resources adjacent to Codelco's Maricunga property. LPI's board recommended that shareholders vote in favour of the deal. Sticking with battery metals, Arizona Solar and Copper Company released a resource update for its combined Cactus, Stockpile and Park Salia deposits that form its Cactus project in Arizona in the USA, which is expected to form the basis for a pre-feasibility study in the March quarter of next year. The measured and indicated resource is now 445.7 million tonnes, grading 0.58% copper, containing 5.2 billion pounds, an increase of 221% compared with its 2022 resource. The leachable resource is now 4.4 billion pounds, a 316% increase. The company says it's on track to deliver the PFS early next year, which will target 45 to 50,000 tonnes per year of copper cathode production from a heap leach and SX-EW operation. Switching to gold, Troilus Gold reported a 126% increase in its indicated ounces at its Troilus Gold project in Quebec in Canada to 11.2 million ounces of gold equivalent, with another 1.8 million ounces in inferred resources. Troilus said the project, which is within the Frotette-Evans Greenstone Belt, is now the second largest undeveloped gold-copper deposit in Canada, where 5 of the 8 largest deposits are already in construction. Troilus said it's 8 months into permitting and aims to file its environmental impact assessment by mid-next year and have its full permits in place by 2025. Finally, the Supreme Court in Canada ruled that the Federal Impact Assessment Act, or IAA, law that assesses the environmental impact of mining projects is largely unconstitutional. The law was challenged by Alberta, which argued it gave the federal government too much power to stop natural resource projects. The Supreme Court, in a 5-2 ruling, agreed with Alberta that the IAA impinged on permitting aspects which usually fall under provincial jurisdiction. Federal Environmental Minister Stephen Guilbeault said the government would seek to amend it to ensure clarity and certainty.
Stephen, I'd like to bring you back. Quebec is usually associated with gold. You mentioned you're focused on copper. What's the copper endowment like in the province?
It's absolutely huge, although nothing has been mined since, to my knowledge, on a sort of a commercial scale since 1991, when our mine, the Opimiska, shut down. But historically speaking, billions and billions of pounds of copper have come out of Quebec and gold. So where we are, it's both copper and gold. So it's just very large, but it just hasn't had the commercial production as the West Coast has over the past few decades. But that's going to change with what we're doing at the Opimiska.
How's the support for the critical minerals? Mining has been a bit of a surprise. We've been talking for a while, Stephen, and there's been a real change in terms of there actually being an embrace of mining. But are you seeing actually any type of support for projects like yourself?
I see a lot of talk around support for the companies, but I don't see a lot of difference on the day-to-day. I think that'll take time. I think mining has had a tough reputation, and I guess if you go back maybe generations, it was well earned, but certainly over the last 10, if not 20 years, I think the industry has done an amazing job at executing ESG, although not a great job at communicating how good it is at what is called ESG, which is a blanket term, but that's partially why it's gotten its bad reputation. So, but nonetheless, I think with the advent or the proliferation, if you will, of the electrification story, people are starting to talk about how you just absolutely cannot eliminate oil without supplanting it with these critical metals, whether it is copper. And I think copper is the one true critical metal in terms of electrification. But of course, you mentioned Quebec. Quebec's well known for lithium and many, many other things, including gold, which is really a critical metal, but is often viewed as a monetary metal. Nonetheless, Quebec is a fantastic jurisdiction, and beyond the narrative, Quebec really has has an incredibly generous, not just endowment of copper, but government system that beyond the critical metals have always supported it, whether it is the CDEX, the Case Depot, the FTQ, the James Bay Fund, all are mandated to invest and support in exploration companies. The very generous flow-through regime, which lowers our cost of capital. And now, of course, you layer on these other, call it tax credits, that we can capitalize upon as a result of the electrification mandates. Makes it, quite frankly, unfair relative to other places in the world that don't have these massive benefits. So look, we love being in Quebec. We love being in Canada. It still has its challenges. As I said, permitting is still slow, but something is going to break. When I say break, I mean there's going to be a realization that there's just simply not enough of these metals that are required to meet these electrification demands. And then they're going to have to change the permitting regime and do a complete 180. There's just no other choice.
That's a follow-up on that, Stephen, just talking about permitting. What types of changes can actually be made? When I look at it, it just seems like you talk to people that this is just the way it is. This is just the way that it actually happens. These things do take near a decade to actually get developed.
Well, they say, 20 years from discovery to development has become the norm, and it's only getting longer. And I think what we really need is streamlining, simplification, elimination of the black box. Tell us the rules of the game, and we'll follow them, no problem. But when it's just a process that nobody really understands the inputs, in order to permit a mine, it's not unheard of to have hundreds of permits. That is inefficient. And then there's also, of course, there's the federal government, there's the provincial government, there's the municipal government, and there's the First Nations. All of these things need to be coalesced, and there needs to be, a single governing body that oversees and makes sure things done right. Nobody's looking to cut corners. Everybody wants to do good business, which includes being responsible to the environment, being responsible to the communities which you operate, making sure they get their fair share. So nobody's looking to cut that corner. But what we need to do is eliminate the bureaucracy and give clarity to the operators and the capital that funds these operators. So that capital is further incented to invest in these projects, and ultimately so that Canada and North America can get access to these critical minerals, which is going to be more and more important as we face growing, heightened geopolitical risk. Now, who controls these? Is it the East, or is it us? We just saw this morning, I saw the Chinese government is withholding some graphite, which is awfully an important mineral. And I think the tit for tat is only going to get worse. And so where are you going to get these minerals? Well, you should get that in our backyard. And Canada is well endowed, Quebec particularly, and so is Ontario and BC. So look, I think we need to get serious about how we source our metals and how we support our industry. We're not the bad guys. We're not polluters. It's about trade-offs. We have to have serious conversations about trade-offs. And you can't dig a hole in the ground without, making a little bit of a mess. But we do a good job. We clean it up. It's a closed-loop system.
Sorry, Paul, you had a question for Stephen.
Well, no, I think the province of Quebec is perhaps one of the more cited in North America in addressing these issues. The government's making big steps, big effort to develop a battery metals critical metals industry in the province with the development of Bécancour, Baie-Comeau. They're going to have graphite anode production centers. They're looking at cathode production center as well, to take advantage of the fact the province has copper, it has nickel, it has manganese, it has graphite. There's a lot of investment. I think it's the province is expecting something like $15 billion worth of investment in battery infrastructure over the coming years.
Well, I think you're right. You're absolutely right. There's lots of investment, which is a very positive thing to see. I guess I was really more referring to the permitting, and I think those have to go hand in hand and streamline the permitting. But you're absolutely right. I am seeing all sorts of commitments from government to downstream processing facilities, which is important. But honestly, I think the resource companies is where it all begins, and how we explore for it. And we got to mitigate our risk in permitting to one degree or another.
Now, the financing picture has been grim this year, Stephen. What's this downturn similar to from past commodity downturns?
It's different but the same, and it's probably as dire as I've seen it, and it's certainly a long time. There's a dearth of capital available to, I would say, 90 to 95% of the juniors out there, and but frankly, a lot of the juniors don't deserve capital because a lot of them don't have projects that are viable. So I think situations like this, the cyclicality of this industry is natural. And it calls out some of the projects and the operators that don't necessarily need to be there. I think, but I think conversely, the good companies rise to the top. The good companies are well financed, and those with capital right now have an opportunity and there's a huge disconnect between price and value. Right now, everything's priced very, very low. But there's some very high value projects that are available. So if you don't have cash right now, you're facing a difficult challenge to get capital. And if you can get it, you got to give away a lot of the company. If you have capital, then the situation is quite interesting. And this is how companies and big portfolio of good quality assets are built, times like this.
How's sector consolidation? We're getting close to the Newcrest Newmont tie-up. We've also seen a little bit of moves down in the exploration junior resource space, Stephen, but still it's a very fragmented sector.
Yeah, I mean, it's absolutely fragmented. And I do think I'm always a big proponent of consolidation, both, at the synergistic level, corporate level, there's 2,000 juniors, there doesn't need to be. And then, of course, at the asset level, there's all these fragmented little pockets. And I see some provinces looking to curtail or shorten up, call it the squatters and whatnot like that, because you do want to have these projects together under one roof. But look, I always say bigger is better in mining, which is most often the case. But conversely, I think there needs to be less junior companies, and that's something that me and my group are very actively looking to consolidate and acquire good assets at low cost prices right now.
It would seem to be that given that there's hundreds, if not thousands of juniors, a lot of them, they're all publicly traded, a lot of them are zombies. It would seem to be the onus should be on the market regulator, the OSC or somebody like that to start, if you're not doing any meaningful work, if you haven't got any cash at all, kicking them off. But obviously that doesn't happen because they've got their own vested interest because they want to keep getting the fees. So they'll keep the companies alive as long as they can because they're getting paid, rather than perhaps being more responsible and saying, you're not a viable business, goodbye.
Yeah, there's been all sorts of talk about that. In the last cycle, I saw that as well. A lot of these companies don't necessarily meet listing requirements, although, I'm not necessarily a fan of regulation. I think further regulation or delisting anybody as a result of that. I mean, the people that would lose are the shareholders, right? I mean, let them be zombies, and if the shareholders can get out of it, great, but don't take away their liquidity. So look, I think, and allowing them to struggle provides opportunities for groups who are well financed. So I guess I'm just more of a free market individual. Let them be zombies. Let this downturn, let the free market deal with the downturn. Let the market do what it does best.
Lastly, Stephen, before we get to our number, the big headline out of Quebec was the forest fire season, which was quite disruptive. How bad were those fires?
Quite bad. I mean, I got to say that, I personally was not directly impacted, but certainly where our project is in the town of Chapé was evacuated multiple times, which is just a terrible feeling. And you have a family, particularly a young family and children, and oftentimes there's one road in or out. So it was a scary situation there. Fortunately, there was no major loss of property, or certainly more importantly, no loss of life in our communities. That and I hadn't heard of any sort of loss of life beyond our community, which is obviously a great thing. But look, it was devastating to the province of Quebec, and it curtailed over to Ontario. And now that I think about it, we were impacted. We saw all that smoke come down to Toronto. I had never seen Toronto have that orange hue and the little smoke. So it was alarming, to be honest with you.
Let's turn to our number of the week. Stephen, you have a number for us?
My number is phi, which is otherwise known as the golden ratio, which is sort of speaks to nature. It's 1.6180, and it can go on, but basically it's the number that we see in nature. And it speaks to fractals, and it speaks to patterns in geology, and it's just a magical number. That's my number today.
Expand on that in terms of like how you see that reflected in places, Stephen.
Well, everywhere. It's a ratio that's very pleasing to the eye, and I think it's pleasing to the eye because it's part of nature. It's often depicted, and you can see a seashell. If you see a spiral, it grows at this 1.6180 ratio in terms of if you do it geometrically. And then beyond that, you see it everywhere. It repeats itself in nature. And then again, it sort of extends itself to fractals. And that's something, if I encourage somebody who's not familiar with fractals to, go on YouTube and learn about fractals. It's about repeating patterns. And these same patterns happen down on the nanoscale and up to the universe scale. And it just, to me, speaks to there's something bigger out there. I don't know what it is, but we're all connected. And it all comes down to math and these interesting formulas and patterns that you can recognize. And I think the patterns you can extrapolate, and you can put that into your regular life. You can look for patterns in the stock charts. You can look for patterns in geology. It's all about pattern recognition. So that's why my number is phi. It's 1.6180, et cetera, et cetera.
Paul, I bet you have a battery metal number for us.
My number isn't really a number. My number is not enough. And that's the amount of nickel, according to Robert Friedland, required to produce nickel-ferrous batteries for all the EVs required to decarbonize humanity's automobiles and transportation, which he therefore believes means other battery chemistries or states will be required.
My number is 4. This is a self-reflective number, but watch for coverage of 4 shows in November by Kitco Mining when we'll be at IMARC in Sydney, Precious Metals Summit in Zurich, Deutsche Gold Messe in Frankfurt, and Resourcing tomorrow in London. Thank you very much to Paul Harris, who's going to be very busy covering most of those shows. Stephen, any news that you want to highlight that's coming up over the next 12 months?
Well, for QC Copper, we're coming out with a long-awaited mineral resource estimate off that 2 billion pound pit-constrained resource. That's coming at the end of November, so watch for that. We're quite excited about getting past that milestone. And then, of course, this Thierry mine that we also just acquired, that's going to be closing in a week, and that's going to be a source of growth and a lot of work to be done, but a very interesting project that we're going to develop over 2024. So please stay tuned.
Follow me on X, formerly known as Twitter, as at Michael McCrae. That's McCrae with 2 C's. Paul is at Paul Harris Gold. Stephen, how can people get a hold of you?
We're at theoregroup.ca. That lists where all of our companies are, including QC Copper and ORCAP, and my email's there. And I look forward to hearing from interested shareholders and people who want to talk about mining.
Stephen, thank you very much for your time.
My pleasure.
On behalf of Stephen, myself, and Paul Harris, have a pleasant weekend.